by the MVP of the Bitcoin Treasury space, Alexandre Lizet. How you doing?
Doing great, and you?
Great, man. Great. And we got Soleil here from True North of the Options Guru again, back on the round table. How's it going, Soleil?
It's going better today. I mean, you can't help but look at the price. We're not supposed to look at the price, right? We're supposed to just diamond hands and never look, but we're always peeking.
Always peaking. 58K gang is back for Bitcoin. Um, that's exciting for anyone who, if you miraculously have a lot of dry powder and we're waiting to buy this dip, good for you. Um, I tweeted today about Adam Back and Sean Bill's company BSTR. Like, I don't know why their merger has taken so long, the de-SPAC transaction, but wow, like talk about like the best timing ever is they're gonna get flush with cash as they go public and be able to buy Bitcoin maybe in the 50, 58, 59K range. That would be
Yeah,
incredible. I'm
yeah, the dry
jealous.
powder, like, how do you keep it dry? I just shoot mine every time, every chance I get like a little speck of it. So I don't know where they keep it.
That's right. That's right. Meanwhile, I'm here just filling margin calls. So, um,
Yeah.
but yeah, a little degenerate on the the margin recently. But big news, lead story this week. Of course, Bitcoin's price is still below that 60K level. We're at the the cycle lows thus far. I think we're really close to a bottom. We've said that before, and Bitcoin can always surprise us. But we wicked below 60K. STRC hit an all-time low below $80. It traded, I think, $73 last week. Strive was into the 80s trading, but everything's been back up this week. We had a MSTR was up 12% plus on Monday. It dipped down on Tuesday, and it's back up almost 12% again today. So strategy has the new 5-point plan. What no better guys to talk about it than you two. I think you guys will have really great takes on it. But just to lay the framework of kind of what they did, they set up their $2.55 billion USD reserve and set a new policy on that USD reserve. The new policy is a minimum of 12 months dividend coverage for the preferred equities, and they want to maintain that coverage at all times, at least 12 months. Of course, they were down to 7 months after they retired the convertible debt, 1.5 billion back in May. Just setting the table here for anyone who might not be up to date on the latest news there. And then they raised the STRC dividend to 12% starting in July for the semi-monthly dividends that they've got going on. They started a $1 billion buyback program for their preferred equities, STRC, STRF, STRK, all of those. So they do have, at least capital earmarked to buy back those products when they're stressed. They started a MSTR common stock repurchase program, also $1 billion, a pilot program to signal to the market that they're willing to defend the stock below a 1 MNAV. And then they talked about the fifth point, which was their BTC monetization program. It's kind of just a follow-on from the announcement that Fong and Saylor gave, last month about authorizing BTC sales, and they said they're allowing it for three purposes: up to $1.25 billion to fund that USD reserve, to fund the preferred equity dividends is another moment when they can sell BTC rather than issuing common equity. So it just gives a different lever to pull. And they can also fund repurchases of the digital credit securities or the MSTR common stock with Bitcoin sales. So that was a lot. That was a mouthful. Alex, what's your big takeaway from this new plan? I'm sure you've got a bullish take on this, as do I, and I'm curious what your takeaway is.
Yeah, three main points out of this very clear and thoughtful and full of leadership move from strategy. Number one is the cash reserve is fully dedicated to the dividend and interest payments. This is the most important point. The second, in my view, that is in between the lines, is that strategy will not necessarily increase the yield if the trading level of STRC is not at the desired level. And the third is the repurchase programs that provide the move from strategies focused on a single issuance, more passive model to a more active capital management to protect long-term shareholder value. And those 3 points, in my view, are key, and you can see how they affect BTC markets overall. And by this, you can also conclude that BTC markets recognize the importance of Bitcoin treasury companies, and that clarity is the most important aspect. And I think here Strategy has provided great clarity. And this means that this is extremely, as you said, extremely bullish, because the fact that the market with clarity goes up shows that there is a lot of investors that are extremely bullish on Bitcoin and on Bitcoin treasury companies. And with clarity, they can make significant bets. And I think that's the main point, that the cash reserve being dedicated to the cash payment obligations of the company, I think that's the most important aspect. And that can indicate as well that the drawdown that we saw might be attributed to at least a major aspect to the use of the cash for the payment of the convertible note. And that specification that cash is now dedicated to dividends and interest, I think, is the most important. And as well, I think the realization of the market that the active capital management of the company has potentially significantly more impact than was thought before. Before it was thought that the yield increase would have more effect, and now it is broadly understood that yes, it can have a significant marginal effect when you are close to par, or at launch and so on. But when you are when you are beyond the levels that are desired, it's actually more about the overall balance sheet structure and clarity of management. And I think here Strategy has really once and again provided a really strong leadership move, because it's been done in basically 2 days or 3 days. And this is really impressive. It's not every company that is able to move this fast in response to concrete shareholder feedback, asking shareholder feedback as well on X and responding to it in a matter of 48 hours within the weekend on Monday morning, basically. I think that was extremely significant, and you can see the effects now in the markets, and the volumes that we see in the market and the investor response indicate that yes, investors anticipate the return of a bull market in the next 6 to 12 months. It's not science, but it's market overall anticipation that you can see across the board. And second, that there is a lot of confidence among investors that Bitcoin treasury companies are here to win in this future potential bull market. When Bitcoin moves 2%, you see Bitcoin treasury companies leading in the space going plus 5, 8%. And that's quite an indication as well.
Yeah, if we're going to make this fun, we're going to have to find something to fight about, Alexander. But I agree with all of that. And just commenting on the reserve itself, as a Bitcoin maxi, like, I don't even like the fact that they have to have it. But if I'm a Strategy shareholder, I acknowledge that the prefs are how they buy Bitcoin. So I have to be willing to, I guess, sacrifice a little BPS here and there in order for the press to succeed, because if they don't, then as a Strategy common holder, I also don't succeed. So I kind of have to be willing to make that compromise. And I was glad that they used it when they did come out and retire those convertible bonds. I was like, good, at least it's a productive asset and it's not just sitting there being a melting ice cube. But I think the timing was just terrible. Bitcoin dumping kind of like right after they went and did that deal. Then it looked like they didn't have as much pref dividend coverage as they had before. So it was kind of a bad timing thing, but I'm glad they did this. I think it was a solid move. and it was probably necessary.
Yeah, yeah, agreed. I posed a question to the guys on the takeover panel yesterday that we had, and we were trying to think about how should strategy approach retiring, I guess their convertible debt in the future. I had some ideas. Let me bring up just a chart of those converts so we can get on the same page, and all the viewers here can take a look at the current balance sheet construction as it pertains to the convertible bonds that are coming up. So we still got, looks like 6.7 billion in notional converts. And again, just to set the table, I think it was the end of May, they ate into that cash dividend, like you said, to retire the converts, Soleil. So obviously, I think they've learned and gotten some market signals from this, but is it retiring these convertible debts closer to the maturity date that's interesting to you guys? Is it good to get that? It was trading at an 8% discount in the market, so is that the ideal time? Is when it's trading at a high discount? I'm curious your take, and I've kind of waffled back and forth on the best approach to this, but I think building a robust USD cash reserve and then strategically, issuing common shares to retire that convert is something that makes a lot of sense as we get closer to the date. I think they might have just retired it too early. Obviously, it was a test in the marketplace and for shareholders to see how the market would respond. And I think the overall take is that retiring the converts in the way they did was a little unfavorable. But like you mentioned, Soleil, it is hard to attribute why the move down in the stock price, because Bitcoin's price was also falling at the same time. So I'm curious your take on how they should approach retiring this debt moving forward.
I mean, I gotta kind of take a pass on this one. I know you said that it was at a discount, so if you can take a discount, I guess you take it. And if you don't take it, then you're kind of projecting that you think you can get a bigger discount in the future. So I kind of can't fault them for taking the discount that you mentioned when they did. Otherwise, you're just kind of gambling.
Yeah, I think, well, first of all, the most important part is that if you're bullish enough, they don't need to retire them. That's
That's a good point.
that's an important point. I think second, you can look definitely on the if you go on the debt tab of their website, you will see the share prices, the conversion price. You see 200, 400, 600. So yes, 600 can seem far from here, but it all depends on your expectations of Bitcoin and your expectations of Bitcoin per share and your expectations of MNAV, and that is not my role to do, but investors can do it. What I would notice is all of the put dates and maturity dates are 2028, 2027 for one of them. But 2027 is, you can see, is 183. It's not 600. So, and it's September 2027. So, we are mid 2026. And investors can make their own assumptions of what Bitcoin could do, typically in Bitcoin cycles. And based on this, you could make some assumptions that would not necessarily be bearish, So I think that's the first point. Then the second one is Strategy has clearly stated its ambition to scale the digital credit business, and that STRC is the flagship product of the company. So any movement towards that direction is a movement that would likely improve the credit risk profile of STRC and would have as an effect to provide more Bitcoin acquisition potentially through STRC, which does not include the issuance of shares, whereby the converts by converting would include the issuance of shares. So then, based on the guidance that they have provided on the framework, you could assume that they would more favor using ATM and or BTC through the BTC monetization structure, And as they replenish the USD reserve, they might as well have more cash on the side that is not in the USD reserve over time or in specific market periods, because people tend to forget that strategy has basically 1.7 billion of annual obligations, but they can raise 1 billion per week. And so I think when you take that into consideration and you see that the notional dollars million value of the converts are around 1 billion each, you could really estimate how much time could strategy take to retire those converts, and then it's a trade-off between retiring the converts and having more amplification potential on STRC side versus having an effect on the BTC, on the effective BTC yield for the period. So strategy went from 10+% of BTC yield year to date to slightly lower than that with the use of the proceeds to replenish the cash reserve. It is still positive for the year. That's one. And second, you have also less convertible notes outstanding with the repurchase. And as they repurchase those, it will increase also their amplification capacity. So you can go out and have more STRC issuance, which is the most scalable business of the company. So overall, you have to take the long picture and imagine a world where strategy has been able to retire all of the converts, and who knows about the other preferred stocks other than STRC. And well, if you look at the amplification calculation of the company, if you go on the credit tab, you will see that this would increase significantly the ability for strategy to scale the STRC issuance, because STRC is 10 billion, but the total debt plus pref is 22 billion. So this means that strategy could literally issue 10 billion more and be at the same amplification ratio. And if in the meantime Bitcoin moves by 2x or 3, 4x, well, you can do the calculation, but this means a lot of potential BTC yield added to the capital stack that would potentially be compensating some potential reduction of that yield through the prior reimbursement of the convertible notes and the retirement and of other products. So most importantly, you would have potentially more scalable, more sizable balance sheet at the end of all this, with more STRC issuance and ATM issuance, and you would have a cleanest balance sheet. Not saying that it's not clean right now, but with the example of what SATA has been doing with one equity and one digital credit product, and you've seen how the price of SATA has responded to the recent drawdown. It's been slightly smaller impact on the stock. And you can also compare what has been the price action of STRF. And when you look at STRF, which has been the most, the highest on the capital stack in terms of preferreds, you can see that it's gone towards the 90, but not towards the 70. So you can see how those potential, 94, you see. So STRF is trading at the same level as SATA effectively. And that's because in terms of characteristics, they share a lot of elements for different reasons. But you can see that as strategy is moving towards a balance sheet oriented towards the scaling of STRC, that could potentially, be of a significant effect on the price of trading, of valuation from investors of STRC. So all of this to say that strategy is very thoughtful about this, and that you have to take the long-term maximization of shareholder value into perspective, and that yes, some retirement of converts can reduce Bitcoin per share in the short term, but that could be greatly compensated and even rewarded by the potential future issuances of STRC. So I think that's what you also were saying, Soleil. So, you know, that's
Yeah, and
very
that's a good
attractive
point about
overall on a long-term basis.
yeah, that was a good point about the retired converts opening up space to add more amplification. And so that should have been kind of a bullish signal for the prefs, especially since every time they retire a convertible bond that's higher in the capital stack, that should increase the credit quality of the prefs. But at the
Yes.
same time, the market just didn't react positively to that. And I wonder if it's just more that Bitcoin tanked at the same time as that happened, or maybe it really was just the diminished size of the USD reserve that did that. But I think the prefs are more stable and higher credit quality after making this move. It's just the market didn't really react that way.
Yeah, from from overall investor feedback, the understanding is that the main point was not the fact that strategy had retired the part of the convert, but that there was an understanding among investors that the cash reserve was meant for dividends and not for retirement of converts. And I think there is a reason why Michael, in its X post, you can see like the second post just after the first one in the reply. He clearly mentions that the cash reserve is dedicated for the dividend going forward, and I think that was the main thing. And so if and you can see that the reaction with the market as well, validating this
Yeah.
immediately after the clarity is made on that point. It's not the only one, but it was a main thing that now investors know from a press release that this reserve is really dedicated to the purpose of dividends and interest, which is very good to see, because this means that strategy can also move forward with more convert retirement, and if there is a respect of that cash reserve dedication for the dividends, then we might not have the same type of reactions, even if I agree, it was also unfortunate in terms of timing. So,
Yeah, that makes sense.
they have amplified a bit, but yeah.
See, this is why I love talking to you guys about this. You guys are doing a great job of breaking down, and Alexander, that provides a lot of clarity in the thinking. And I think a large part of this, like what I really loved about the announcement on Monday with this digital credit, 5-point framework, is the specificity and the clarity that they provided. Right? There's been some criticism, and I could see that side of the coin with some of the communication to investors in the marketplace from strategy, but this was like really comprehensive. It answered a lot of questions. It was very detailed and to the point, and I think the clarity is something that is extremely well received by the marketplace. So
Tyler, that I think that is important, but I think it's also important that they didn't over detail, because remember when the MNAV guidance came out, me being a covered call seller, I immediately did not like that. I was like, you cannot just give the whole game to the adversaries. You have to have adversarial thinking. And I was like, oh crap, I can just sell covered calls at this MNAV and then just take them off when it's below. I was like, no, you can't do that. And so the fact that they did this, and they basically armed themselves with various defenses without specifying exactly how they will use them or even if they will use them. And it just reminds me of the saying, was it the fear of death is worse than death itself? And so I'm hoping that they don't necessarily have to use every single one of these tools that they've made available, but the fact that they exist is great. And maybe if they do, like dip a little toe in the water, because they said, oh, maybe we'll sell some Bitcoin, and they sold 32 Bitcoin. So maybe they just throw a little nibble to the market, like maybe use a little bit of each of the tools just to show the market that they're willing to do it, and then mostly not have to do it. And if they never have to use them, I think that's probably best case scenario. But the fact that they're available and they didn't come right out with like MNAV guidance and say, we'll do it at exactly at this MNAV or something, I think is a better way to do it. So they're learning from their mistakes, and I think that's a positive sign as well.
Yeah, there is a six point actually in the framework, which is not in the summary of the point, which is in fact five. But when you look at the entirety of the press release, there is a sixth section, which is common equity, disciplined issuance, and they elegantly said that you would have basically disciplined issuance at or near 1x NAV, which comes to the exact point that you are making, Soleil. They don't say a specific number of MNAV. And at the same time, they also say that basically if it is significantly lower than 1x MNAV, which is a level that's basically at the company's hand, they might use BTC monetization instead. So I think all of those things is just maximum clarity with maximum optionality. And that is how you create shareholder value over the long run. And you will have always criticism saying, oh, but the company previously said this and now it's evolving. And well, this is an operational company. And I think the Strive team made a good point recently that this is also showing the operational component of a Bitcoin treasury company compared with, an ETF. And this is how also strategy is creating long-term shareholder value, is by adapting over time to market conditions and responding to investor feedback and adapt to whatever is the best aligned with, of course, the long-term objective of the company, which is to accumulate Bitcoin and hold it forever as an objective, and at the same time be able to use the firepowers that they have. And which type of company has more firepower than Bitcoin rich company? Well, it's very difficult to find.
Yep, really is. And I just had to tweet out.
Just like to make a parallel, imagine if a company that would only base its capacity to pay its credit instruments with future cash flows and not have any reserves. Imagine the firepower of that company. What would they say? They would come out and say, oh, we will revise our expectations of cash flows for the future. It's okay. Thank you. No, strategy has the money on the balance sheet, and this is providing a level of value to equity investors and to credit investors that is completely unparalleled in traditional markets, if, of course, you attribute value to Bitcoin, but that's another debate.
Yeah, that's a good point. And it reminds me of something. I'm from Indiana, and so a friend of mine from high school ended up becoming a farmer. It does happen when you're from a place like that occasionally. And one thing that he described to me about soybeans, and if you look at Bitcoin as also being a commodity, is that people may criticize them for occasionally selling Bitcoin because they're supposed to sell prefs and buy Bitcoin. However, if you understand the cyclic nature of a crop, when everyone is harvesting, the price goes down. And so what he described to me was, if you can afford to silo those beans until the price comes back up, then you can actually avoid selling at depressed prices. And then furthermore, if you could afford to not only silo your own beans and wait for the price to come back up, if you could actually buy more, then you could actually be buying the beans, cheaper, and then waiting for the opportune moment to sell them. So I think this is just a pretty standard technique in commodities. and it shouldn't be considered anything too unusual for Bitcoin.
Yeah. Well said, and good analogy there. And yeah, I think you nailed it on the head too, Alexander. Is the maximum clarity with the maximum optionality. It was that's a brilliant way of putting it, and I just had to
Clip
tweet
it.
that out as well. Yeah, we're clipping that for sure. I would like to jump in and take a look at what Strive and Asada are doing. Let me just share the latest chart. Things are moving fast today in Bitcoin Treasury land. We've got SATA, I mean, is up almost 7% on the day. That's a beautiful chart, kind of looking year to date, seeing how quickly, their digital credit product is snapping back close to par, and I think it's just a matter of time, provided we don't get a dump on price or some other, short-term news that Strive's digital credit instrument should be back to par very soon. And I guess I should bring up Matt Cole's tweet about some guidance on SATA here.
Yeah, sure.
Yeah, let's bring this up. Um, we'll just run through it. So Matt, the CEO of Strive, of course, gave an update on SATA, and he ran a poll on X that I jumped in and weighed in and gave my 2 cents, which is worth about 2 cents. But Matt said targeting $100 on SATA and minimizing the long-term volatility remain the core objectives, but going forward, unless they communicate otherwise, investors should not assume Strive will automatically issue new SATA shares at $100, although we expect that to remain likely under normal market conditions. And he goes on to talk about how right now, because of the volatility in digital credit, that it's not normal market conditions. Punter Jeff, the chief risk officer at Strive, was showing yesterday how basically the borrow rate overnight to short SATA shares was something like 62%, 63%, and I can bring up the price charts on that, and I made the point. It's crazy to me that every investor in SATA isn't just like loaning out their shares at that borrow rate, because if you own $1 million in SATA, that's basically $1,500 a day at 50% a borrow rate that you can just clip as an extra, additive to that coupon that you're already getting, which, when SATA was trading down in the 80s, I think the effective yield was 16.5% or something like that. So, I think anyone who just invested in SATA is pretty happy, and it looks like the market is really responding well, to this I guess update that Matt Cole gave on SATA. What's your take, Alex, on that guidance, and do you think strategy should follow that lead and be less willing maybe to issue rate at $100 per share? Because I mean the pull to issue as much capital at $100 par is, I assume, very strong. It'd be hard to resist that. We've talked about that on the show, but given the market circumstances, things change.
Yeah, the context is that there is Matt Cole mentioned that there was about 1 million shares increase in short interest, which is quite significant. And the second aspect is what we just mentioned about maximum clarity with maximum optionality. And here, this is another demonstration of this principle. There is a third aspect, which is that SATA is already amplified at a quite significant number, which is something that the market values correctly as well. In terms of you see the $97 price, it seems like the market is not afraid about that level of amplification, and at the same time, Strive can decide whether or not to issue more shares at 100 plus to do ATM, or to let the market decide and not do the ATM at that level. So I think what that shows, and what the recent drawdown showed, and what the recent framework is showing in response to investor feedback, and what the valuation of the instruments show in terms of appreciation of credit risk and so on, shows that June 2026 and early July have marked, in my view, the passage from a purely retail-driven market to at least a mixed retail and institutional market, and potentially even in terms of market impact of quite some level of institutional market impact. Because when you see those levels of short interest, when you see the institutional level of response of strategy, this can indicate that there is some significant institutional investor participation. And I think the main point of Matt in that ex post is, to remind short sellers that the company is not necessarily required to sell more stock at 100, and so it could cost much more than anticipated or not work out necessarily as expected. I will let, of course, Soleil expand on that, but I think that could probably be a reason. Another reason is that in general, Strive might not want to increase amplification as well, just simply that. And as well, on the other side, elements of feedback that I have viewed as quite interesting as well on the other side from investors is that it might complexify the vision of the product by, this is very clear that this is at 100 and it's like it's stuck at 100, and you don't have, if the product goes at 102, you would not have that volatility of 102 to 100, you would stick at 100. And at the same time, again, as Matt highlights, it is not because the company has the capacity to not issue that they will not issue. So, they can manage that intelligently as well. So it's an interesting development, and we'll see. But I think it's another great example of how early we are, because this is part of the actual optionality that the company already has. This is not new. So, as they have that ability, the fact that it's becoming known, well known as company intentions publicly announced is also important. And it's quite interesting to see how X plays more of an important role now in capital markets on the Bitcoin standard too.
Yeah, it's a good point about the optionality there as well. And so I do think is an important tool, but I kind of always just assumed that if they ever wanted the yield to go down, they could just let the price run. But is that true that Strive had to clarify that, and Strategy doesn't have the ability to do that? I just kind of assumed that they could let the price run and then lower the yield by 25 or 50 basis points the next month.
Oh, that's I think that's slightly different. So Strive has added an investor protection on top of STRC, compared with STRC, which is that they can only lower the dividend rate if the price is at or above 99 on average over the specific period. So that means that if the price is below, then you run into some
Right.
obstacle, because you have that limitation. And basically the negotiation with investors is that yes, you can lower the interest rate, but if things are going well. So it's very basic, but that's an additional protection that is within SATA, that has been added to SATA compared with STRC. But I think that's different from the discussion on whether or not the company issues more stock at above 100. I think that's a slightly different one. But you're right, that's another way that Strive can have an effective lower yield by having the price run slightly above. It's not lowering the rate for the company, but at least from the investor perspective, it lets the market do the pricing itself.
Right. And then the other part about that is the amplification ratio can only go so high before it would probably be considered irresponsible. And so if they're pegged at 100, I mean, there's limiting factors on how much they can actually ATM those prefs, mostly attached to their liquidity. But assuming that they were ATMing as much as they possibly could, but then once they reach their ceiling on amplification ratio, then they actually wouldn't necessarily want to remain at 100, have like the technical ability to do it, but not the in reality ability to do it. And so in that sense, it might make sense to let the price run allow for the yield to actually come back down, and then the bears can stop complaining about how it's they're paying 12% in perpetuity, because eventually, maybe as Bitcoin's CAGR continues to have diminishing returns, eventually the yield on these products may come down in the future as well.
Exactly.
Yep. Well said. Yeah, it's fascinating. I think there was like a really big opportunity for people who, wanted to invest more in digital credit over these last weeks, and that window is closing. I think there's still opportunity there. But just looking in the comments on the stream, we've got Sand Deepstar says hello, Alexander, and he's bragging about his purchase of STRD at $56. He's loving that huge effective yield, which getting close
That's
to
a boss
20%.
move.
Yeah, it is a boss move. If you believe in the capital structure of the company, certainly it's lowest among the preferred equities. But what a yield! If strategy never suspends that, which I don't think there's any indication they will. That's an extremely high yield. You're just going further out on the risk curve, not financial advice, of course. But what do you make of the recent spike in the prices, I guess, of all the instruments, with Bitcoin's price remaining around 60K? Is that a signal that buyers were waiting to step in, or is it a signal that this new guidance is giving that investor confidence? And like Alexander said, there may be more of an institutional component now at play who's digesting this differently than the retail community would, Soleil.
There's so many factors. I mean, people took some money and rotated into AI, and then the smart money probably sold at 210 or whatever, and money may be rotating back. I think you had already mentioned the short interest on Strive, but there was a bunch on Stretch as well, and it's still bullish in the long run, but they almost are a little bit of a victim of their own success, because the insane liquidity is almost like kind of attractive for the short sellers, right? If you want to take a big short position, you want to go where you can get in and get back out, because you don't want to be trapped in that trade. And the timing of some of that short interest was interesting as well, and I would like to see what happened after the record date, because as expensive as it was to short SATA on that one day, where you can just pay that one daily dividend for shorting it, but get the stretch dividend. The computers, the bots, maybe had some they could figure that out. So it would be kind of interesting to see if the stretch short interest kind of evaporated after the ex-dividend date, and after they got their 1% payoff or whatever, and then started rotating money back into SATA, or the next AI cool thing on the block.
Yeah, there is a professionalization, institutionalization, and as you said, ironically, it's also that period of market volatility that will enable a stronger options market, a stronger, volatility profile, with investors having the ability over time to hedge as well, which will enable them to take larger positions. It's kind of ironic, because as there is that options market that develops, investors can hedge more and have bigger positions in the main components. So I think all of this is very telling about the future, because the fact that Bitcoin has been basically flat before the start of the drawdown, and now that we are back up to better levels, as we saw with SATA, for example, you can imagine what could happen if Bitcoin would go up by 30%. Well, like Bitcoin
I
has
like the
gone up
sound of
by
that. I'll take it.
Bitcoin has gone up by 2%, and my understanding of before joining the call is when now I see is MSTR is up 11%, and Bitcoin is up 2. So and it is within a bear market, and I think something that I think is very important is Strive has been basically raising almost all of its capital, at least the digital credit one, within a bear market.
Mm-hmm.
And while credit risk profiles could be the most bearish ones because they are literally being made in a bear market. So this means that you've had already tens of billions, 10 plus billion of dollars invested within a bear market, which means that all of these investors are extremely bullish on Bitcoin because they basically didn't care about the bear market profile. And how it responds today and since on Monday when the framework was announced, it means that it is an illustration of truth will set you free. And the clarification brought by strategy is an illustration of that, because with the clarification, the truth of the credit risk is more transparent, it's clear, market actors can make larger bets, and the exemplification is that, in fact, after the framework was published, large bets were placed again, and both on the digital credit side and on the equity side. And you can see how that market is evolving with more volumes, with more market players entering the space, and with overall, market price discovery for these instruments that are very new. And the fact that we came from like just 3 days ago, 3 market days ago, that you would have those narratives of the death spiral and these kinds of things, to now just a cold institutional repricing of those instruments in the face of clarity, I think shows that this is math playing out. And as clarity is being brought, and investors can do their own analysis based on the credit profile, it also shows, by the way, that the market doesn't anticipate a bear market to go beyond 17 months. Because if the market appreciates so much with 10% moves on a daily basis, a 17 months cash reserve, it actually means, no, it means more, because if the market reacted down with 6 months and reacts up with 17 months, it actually means that it anticipates that the bear market might be finished after 17 minus 6, so after 10 months or so. And so that's quite positive in my view as well. And that corresponds to the typical cycles that we see. And it just shows how the market is anticipating a repetition of the traditional cycles, and how we are in front of one of the most significant potentially, and it's not investment advice and so on, do your own analysis, but I'm just commenting what the market is displaying right now, which is extreme strength in a bear market, in response to a 17 months cash reserve, which is estimated to be enough, while 6 months was not enough. So it means that actually the market anticipates that the end of the bear market, or at least the start of the bull, in a significant way, would be between 6 and 17 months, which would be within historical benchmarks.
Yeah, I think it makes a lot of sense, and I think Strive, you know, maybe that is the mathematical reason behind Strive moving to that 18-month of dividend coverage. But I think that it does seem like that is a well-received runway in the marketplace, and I would like to see them grow it slightly, as I've said, into the bull market when they when prices are running hotter. That way they can store a little extra runway and really buy the dip if Bitcoin continues to perform in this really volatile manner. I just brought up an article here really quickly to show kind of the contrast. This is a Market Watch article, and their response to Strategy's plan is buy HODL. Strategy now has a plan to sell Bitcoin to raise cash and buy its stock, which is not true. The HODL editorial thing is kind of interesting. And then you look in the Bitcoin Treasury space, and you can slam us for being uber bullish on the industry at large, because we're covering it in depth. But our headline, our byline is Strategy raises stretch dividend to 12% and launches $2 billion in buyback programs. So I think that's an interesting, really, it's like the traditional markets, the legacy kind of financial news sites are saying, oh, it's over, Sailor's done hodling. Well, it's like, those of us who follow the space closely, or like yourself involved, with the Bitcoin Treasury company, Alex, realize, it's like there's so much more to it, right? And traditional finance is going to catch up, and I think Bitcoin Treasury companies are doing a great job at spreading, the value proposition of Bitcoin and why, a corporate structure for, holding Bitcoin and raising money to purchase more Bitcoin just makes a lot of sense.
I'm not sure they will catch up. I think you will just replace them as the media, So, I have an anecdote on this. I recently wrote a paper on on Bitcoin itself for a traditional finance newspaper that I will not name. And it's not the one that we've been involved. We have a weekly interview that we've been doing with Le Revenu, which is a traditional finance, personal finance newspaper, but that's different. But another one, and they told me, we cannot publish that because we thought that you would write about digital credit and not about Bitcoin. And so, it's like, so I had to remind them that digital credit is backed by Bitcoin. So, so if they wanted me to write about digital credit without speaking about Bitcoin, it would have been difficult. But you can
Right.
see like those levels of like the level that you have to be at in terms of understanding of Bitcoin and in terms of adoption of Bitcoin, it should be very early stage. Like this is the traditional finance, So yeah, I think I'm unsure that they will catch up, Taylor. It seems like they will likely either they will either grow their way into it, or they will be replaced, but they have no medium range there in terms of the adoption, or they go all in, or they just disappear. So
Well, that's a good point about the adoption. And so there's been some suggestion that while the prefs are the majority retail currently, that they need to season for a few years. And when you can take a 3-year track record and put it up against other products, then you'll be able to have a better shot at pitching these investors when you're trying to do capital raises. So I think I think they did some kind of announcement, like was the 1-year anniversary for Stretch. I think it's pretty close to being 1 year. And so in 2 years, 3 years from now, if it's still majority retail, is that a problem? Does that invalidate the thesis? Because the pitch was that, okay, retail can get in at really good yields, and we're going to have to deal with the volatility. We're kind of basically accepting being the guinea pigs, really, of this new product. And eventually when institutions come in, maybe the yields won't be as high. But if they're not interested after these season, does that invalidate the thesis, or can it just be a retail product forever?
Yeah, I think that's what we discussed before. The type of volatility, price action, and volumes, and the short interest, and based on overall investor discussion as well, shows that institutions have entered digital credit, and that means on one side that you can have a bit more volatility because that they have much bigger pockets and they can make moves that can be quite significant, and at the same time that instruments will be more efficiently priced over time, as well as more market participants enter the market. So as strategy strive are working on improving constantly their capital stack, you could anticipate that the pricing could also be reappreciated correspondingly. So more clarity, more balance sheet strengthening, and also Bitcoin going up at some point, of course, will make the whole difference.
Yeah, absolutely. Thanks for breaking it down here, guys. Alexandre Lizet and Soleil, make sure you give them a follow on X and check out all their videos. Soleil's on True North, streaming every day about selling options. And to your point, Alex, I think Strategy's not doing this alone either. Yes, they're setting the table and running the playbook, but there's a lot of Bitcoin treasury companies, and I think they're all learning from each other, and they're also probably in contact with their broker dealers, with the investment banks who, do the sales on the ATM side for them. I don't pretend to know this side of the space as much as you would, but there's got to be some feedback that they're getting from the traditional market makers and market participants, investment banks on, this might work better in the marketplace.
Yeah, definitely.
Yeah.
So we didn't find much to fight about, but maybe soccer. Alexandre.
France is going to win. I'm sorry. It's
well,
a dub.
what I want to know is how come you come over here and all your players just start sweating? It's just a little bit of sunshine. Like, it's not that hot. You guys not have sun over there or what? What's the
thing
deal?
is, France performed well in Qatar at the last Cup, so there's this stigma of European countries not performing well outside of Europe.
Right.
But I think France is kind of putting that to bed. They may sweat a lot, but they're still putting in the goals. 3-0 against Sweden yesterday, and I wouldn't be betting against them at this point. I'm just hoping for maybe a quarterfinal run for the U.S. squad, but we have to bow down to France and Mbappe extending his
Is the US France final possible?
I
think so. Well, no, semifinals. I think we're on the same side of the bracket. Like, you're in a bracket, we're in a bracket. So I think we could meet in the semis if we win out. But then whoever won that one, I think would probably go to the finals. So I don't think we can have a finals. But
let's
semifinals maybe.
Let's
we'll
hope
see
for
you there.
that. That would be a rousing conversation on the roundtable. So. Thank you guys again for joining. Thanks to all the viewers on YouTube and X who popped in. At Alexandre Lizet on Twitter, X, at Knight Who Says Knee, spelled like you see it on the screen. Soleil. For those guys, I'm Tyler, at Tyler Compiler, and we'll catch you next week on the Bitcoin Treasuries Roundtable.